can't really use it whenever I go into the bigger presentation, so I'm going to use this one. But tonight's training, understanding the candlesticks, we're going to go over some of the basics and then also talk about each of the patterns, how the candles are made up, and also how it correlates to the charts and how to read the charts better. So I'm going to bounce back and forth a little bit. Little house cleaning stuff. Myself, all the other providers, we only have one social media account. So this is my only Twitter account. This is my only IG account. So follow it if you're not. Follow Chris, Crystal, Budget Dog, Ray, Kia, everybody within the Wealth Squad. Go to the Wealth Squad's IG or Twitter and follow the providers that they are following. That's your safest bet for knowing whether we're real or not. Anyhow, we only got one account. Don't get bamboozled. Don't get bamboozled by the spammers. So understanding the candlesticks, the basics, right? So this is the appearance of that it basically has 6 parts. You've got your highest price, your lowest price, your upper wick, your lower wick, your close and your open, and then you've got the body of the wicks themselves, right? So each sort of the definition of like, what does each of those mean? What does that signify? So the body, the bearish candles here, the bullish candles here. So the body is the difference between the closing price and the opening price, whatever that may be, right? So that whole body, however big that is, however small it is, it's the difference between those two prices, right? And then your wicks on the high side and the low side, those are called, they're called tails, they're called shadows, whatever you want to call them, wicks. But it's the highest the highest stock price within the candlestick period and the lowest stock price within the candlestick period, right? So if you're looking at a day chart, this is the highest price that this reached on the day chart. If it's on a 15-minute chart, this is the lowest price that this hit on a 15-minute chart. So it correlates to the specific time frames. I look at a lot more day charts than I do the lower time frames. But whatever that candlestick shows, each one of those candlesticks is going to be equal to the time frame that you're watching it on. So one of those candlesticks is going to be equal to 1 day because you're watching it on the day chart. If you're watching it on the hour chart, each one of these candlesticks is going to be an hour worth of information, an hour worth of data for you. The highest price on the wick, so that's the top of the upper wick, and that's the highest price traded during that specific period, whatever your time frame is, right? The 15-minute, the 5-minute, the 1 second, whatever you're using. The lowest price is the bottom of the lower wick, and it's the lowest price traded during the specific period, whatever your time frame is. And your opening price is going to be during that candlestick period, during the new candlestick period, right? If the market opens, it begins a new candlestick period. If you get to the hour flip, it starts a new hour candle, right? So that's going to be the price of the very first trade. Whatever trade that takes place at that flip mark, the market opening, the market closing, 15-minute, 30-minute, whatever, that's going to be what that price is. And the closing price is going to be the last price traded during the period of the candlestick formation. Again, it's all relative to whatever time frame you're looking at, right? It all switches, but it's going to be the last price that was traded when the market closed. And if this price is above the opening price where this opened, then your candlestick is going to be green at the close, right? And if the price is below the opening price, your candle is going to end up being red. Does all of that make sense to you guys? Any questions? We good? All right, moving on. We're going to move on. So now this part can get more advanced. There's a lot of advanced patterns and candlesticks. These are just some of the basics. And I just wanted to cover some of these because all of these candles, when you recognize them in their formations and their patterns, they signal bullish or bearish trends, right? So I'm going to break these up and I'm going to go over each one separately, right? So these are the bullish patterns. basically the six basics: the hammer, the inverted hammer, the morning star, a bullish engulfing candle stick pattern, the piercing line, and the three white soldiers. These are all sort of basic formations that if you understand support and resistance, and again, like there's levels to all this, right? Don't come looking for these patterns if you don't understand any of this. If you don't understand any of this, you're not going to understand this. So understand that there's levels to all of this, right? So I want to just flip back here for a second, actually, and come back to one of the charts, right? So just for instance, with I just have SPY pulled up. So with SPY pulled up, each one of these candlesticks, what I'm also looking for is that when you're reading these candles based on, you know, where they close, where they open, the price action movement, right, is what we call it. So right now, SPY is sitting at 394. And you ask like, okay, well, when was the last time that SPY was at 390? You know, it's at 394, sorry, 394, but let's just say the last time it was at 420, right? So let's just put this target here for a second. Based on the data of the open and closing price, how this moves on a daily basis, right? And looking at the day chart and looking at the number of days, count the candlesticks, right? So this is where we're at today. This will be tomorrow. So you basically have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So in my theory, the most elementary hypothesis of this is that you're going to wait at least 2 weeks before this even reaches 420. If it does, that's not to say that it will, but that's just an estimate. When I'm getting into swing trades on shares, or I'm getting into swing trades and options, I'm looking at the price action movement on a day-to-day basis of like, okay, well, what's my target? If you want to go lower, right? 420 is sort of a long-term thing, but let's just say you go shorter than that. Let's just say you go to 406, 407, right? At minimum, you probably have to wait 2 to 3 days, right? Because you're already at 2 days here. The last time it was at 407. If it fell from 407 in 2 days, it can easily go back to 407 in 2 days, right? So that's sort of the basic price action movement of how I map out targets and where I estimate trends will break to the upside or trends will break to the downside. But you can't understand that if you don't understand the basics of like, what does it mean to read a candlestick? What does it mean to be at the peak of this? What does it mean to be at the bottom? What are some of these patterns and trends? So if you don't understand it, do whatever it takes. Go back and rewatch the video again. Take more notes. Rewatch it again. Take more notes. Rewatch it again until you really understand it. Because once you understand the basic fundamental of what a candlestick is, how it moves, how you interpret it, and what that signals from each candle, then you're going to better understand the more advanced patterns, and you're going to better understand price action movement on a daily basis, right? You can't understand the average daily range or the average true range if you don't understand support and resistance and how a candlestick is formed, right? So don't underestimate the levels of your learning, because it's important. And once you have it, nobody can take it away from you. It's only going to keep getting stronger the more you study. It's not like it's going to diminish. Yes, it will. It'll atrophy over time if you don't exercise the muscle. But this is how I look at the charts, and this is how I analyze it based on that. So I just wanted to let you guys see that in real time, how I look at it. Oddgloven, you've asked, those patterns are best used for daily frequencies. That could be on any chart. That could be on a day chart, a 15-minute chart, a 30-minute chart, whatever. It all depends. What I want to be able to do is for you to be able to look at them and to be able to see them in the charts that you're looking at, because they'll make your opportunities a lot clearer. So let's bounce back. So basically with the hammer candles, right? So this is your hammer candle, this middle one, right? So it's going to be the long lower wick at the base or the bottom of the downtrend, right? So you're reading this chart from left to right. That's how you read the stock charts, right? Left to right. So at the base of the downtrend, you're going to have the longer wick. The body's usually going to be small with very little to no upper wick, right? It's going to just be really small. And this hammer candle can either be red or green, which I'll cover on the next on the bearish side, right? So typically what this indicates is a strong reversal trend and a potential price surge to the upside. So this pattern shows that there's high selling pressure, and also during the same period, the buying pressure basically took control of that price action movement, right? Because now it's starting to trend to the upside. So anytime that you see this hammer candle and it's green, these are elementary entry points for you. You can anticipate, right? It's not a solid confirmation, but almost when this candle gets to this middle point here, you can start to plot your moves into catching things early to the upside. It's risky if you do that, but the more advanced you get, you can better understand your risk in that way. But usually you wait for this second candle, the second or third candle, for it to be a final confirmation before you enter. But if something's running up this far, and this, again, like understanding the candles of breakouts happening when they break previous highs and previous lows of previous days. So when this breaks through this, right, what happens? Then it breaks out. It goes further, right? So you can probably enter early and scalp this little gap, which I did a previous training on trading gaps, right? You can scalp these things, but in terms of swing trades, longer holds, things like that, you want to wait for more of a confirmation. But this is your hammer candle, and this is your hammer pattern. Barnes says, what is the indicator you have for time frame continuity? It is that. It is time frame continuity. It's it's a board writer C or something like that in TradingView. I'll pull that up for you guys. And to reemphasize what Tori said, the Strata system I heard also is good too. So the next one is you have your inverted hammer. So the inverted hammer, the only visual difference between the hammer and the inverted hammer is the long wick that's above the body of the candlestick rather than below it, right? That's the only visual difference, right? So it's inverted to the other side. And the inverted hammer can, again, also be red or green. It can be bullish or bearish. Green is bearish, green is bullish, red is bearish. So this typically indicates that the potential beginning of an uptrend to the upside, right? With the ended downtrend indicating that the buyers are probably going to gain control at some point, right? So anytime that you see this on the base, again, this is going to be a bullish formation to the upside. Next, you have your bullish engulfing candles, right? And so this is made up of two candlesticks, and they both occur at the bottom of the downtrend, right? Because you're reading it left to right, coming to the base of this. And the first one is bearish, the red candle, while the second one is green, and it engulfs this other candle, right? Again, for breakouts to happen, it needs to beat the previous highs and previous lows of previous days. This is the previous day. So this is engulfing this candle. So this becomes your confirmation that this is going to signal an uptrend, right? So the second candle's body is bigger than the previous, and there's usually a gap between the closing and the opening price, right? You can see this tiny gap here of where this is, right here. You can see these gaps on either side. And this indicates that there's increased buying pressure, and it's the beginning of an uptrend as the buyers are likely to drive the price higher. So these are really strong indicators of really strong uptrends anytime that you see these candles. And we'll go over the bearish engulfing candle on the flip side of that. But this is one that I really pay attention to a lot. You know, if you understand the money flow of what Uncle Gerald teaches and the training that we did together, that you know, these usually occur at the base of those stage ones going into the stage two breakouts, right? Makes sense? So even though we see one green hammer wait for another hammer for confirmation, it won't K Mills, it won't be a hammer candle that next candle. Usually the following candles after those hammers end up being stronger bodies, right? This is usually sort of that the hammer candles are almost like neutral. It's almost like dead smack in the middle of the trend. So you usually won't see a hammer candle after another hammer candle, or another inverted hammer after another inverted hammer. Like, it'll usually just have a stronger body to it. Yes. Yeah, you want to look for the other green candles. So we talked about the inverted hammer, the bullish engulfing. So now looking at the piercing line pattern, right? So this is made up of a long bearish red candle right here, followed by a long green candle, and it occurs again at the bottom of the downtrend, right? So this has a gap between the closing and the opening prices of where these are, right? You see where the opening price, the closing price, same thing. Opening price, closing price of where these gaps are. And the closing of the second candle is more than halfway up the bearish candle's body, which you see that here, right? So this is the halfway point, and this is where the high of the day was on this, and this is where this closed. And it closes above the previous candle midpoint, right? So this indicates that it's the beginning of the period. Looks very bearish, right? To where it can be deceiving, but the buying pressure increases throughout the candle, which indicates the bulls are interested in buying at the certain share price, right? So this one can be deceiving sometimes because of where this is sort of flatlined here at the midway point. So almost every time you really need to wait for that second candle for the confirmation of where this uptrend is going to happen to the upside once it breaks this previous candle on the piercing line, right? Does that make sense? And here next we have the Morningstar candle, right? So the Morningstar candle, it's made up of 3 different candles in a downtrend, right? Again, left to right, you see the downtrend happening. The first is the long bearish candle where this broke to the downside. The second, which becomes the star, the central point, right? It's the meeting point, and it presents very long wicks, has a short body, and closes below the previous closing price, which is right here, right? So it closes below, it's sort of at the midway point, which you think about the midway point, right? In the middle of anything, in the middle of a piano, you've got middle C. In, the middle of a race, you're halfway there, right? So it's that neutral point of being halfway. It's sort of on the fence of things, and so you wait for that confirmation. And the third candle is that long bullish candle that closes above the midway point of the first candle, right? So that midway point is really right in here, right? So it's going to close up here above that. And the Morningstar signals that the current trend is losing steam, which is this downtrend, and it's confirmed with the third candle launching the uptrend, which is right here. This launches it into the next orbit, right? Make sense? And then you have the 3 white soldiers for the bullish pattern, right? And so this is going to consist of 3 green candlesticks inside of a downtrend, right? So it's going to be on the inside of it, right? You see the 1, 2, 3, the 3 soldiers right here at the tip of the wicks. Think of it military bearing, standing at attention, standing your ground. That's a signal, right? So the second and third candles open within the body of the previous ones, and they close above it. And the candles usually have little to no lower wicks, right? So there's not a whole lot of the lower price action movement. Everything is moving to the upside. So this usually indicates that there's strong buying pressure, which drives the price higher, and it indicates an upcoming price reversal to the upside, right? Because we're in the downtrend right now. So the bigger the candles are, the stronger the buying pressure. So the 3 white soldiers, along with the bullish engulfing candles, are really important for the bullish patterns. These are really important to look at. And these really, when I always catch these banger trades, I try to catch them on these patterns. And these aren't patterns that I like map out and I'm like, oh, that's 3 soldiers and that's this. I just understand the candlesticks, and you're going to be able to habitually see it naturally once you understand it all. So that's the bullish candles, right? Any questions about the bullish candles themselves? Can you show an example of these patterns on a chart? Well, so it's these here, essentially, but I want to take you over to Finviz, so you can use some of these screeners, and I believe like Stock Charts has them also. I don't use them so much on Stock Charts. I use Finviz more than anything for all of my scans, but just to save time, I open this up. So you just come up here to screener, come here, click on all, right? And you can pull this over to these patterns, right? You can see the different, head and shoulders, double bottoms, all these things, right? So you can do those patterns, or you can come to the candlesticks and really map these out if it loads. All right, here we go. Right, so you see your hammer candles, your inverted candles, and there's more advanced candles, right? There's the spinning tops, the doji candles, and I'll go over more advanced candles later. So let's just, since we talked about the hammer candle, let's go look at the hammer candle, right? You can do it based on this, and you can cater this specifically to what you're looking for. So right now you've got 483 bullish opportunities with the hammer candles, right? So you could say, you could take performance to today up, right? And going back to when I did the training on trading the gaps, I told you that I look for things that are up between 3 to 5% when I'm looking at things, because those are good, strong indicators of momentum to the upside or to the downside. So your job is to narrow down your watch list, right? And look at very specific numbers. So we went from 483 opportunities to 4, right? And granted, these are ETFs. I don't want to look at the ETFs because ETFs move much slower. You can look at the ETFs if you want to, but you have 3 opportunities here, right? For these 3. Now you can look and see if you want to trade options on them. Are they optionable? Only one of them. So let's just, because one of them is optionable, let's just go look at this one. MRAI. So let's look at it on TradingView, just because it's a cleaner look than what Finviz is. So MRAI. Right? And so you can see the hammer candles, right? It's not the same, but you've got the hammer candle here. You've essentially got the hammer candle. You've got the hammer candle here also. So this is an example, right? I don't have, and let's just see, since we're here, I'm just going to pull up the options chain on my phone, MRAI, just to see what it looks like. It's pretty far away. So, I mean, the price is $1.02. The next option is $2.50. So it's pretty far away. So options wise, I wouldn't even trade this on options. If I were to do anything, I would do shares if I were to get into this. But this is an example of the hammer candles. Is Finviz free? Yes, it's free, but I pay for the elite version. So it gives you more information. And I want more information. I want real-time data. So what are some ways you can confirm those patterns are reversing? I've studied the patterns and sometimes take trades based on when I see them setting up, but the patterns reverse often. I want to find other ways to confirm this aside from just using the previous candle for support resistance. Basically ways to hold on longer to my trades instead of shorting them. Grayling. So a lot of it is really, you really have to understand those support and resistance levels, because you're right, they can reverse. just because the charts are showing an inverted candle or 3 white soldiers doesn't necessarily mean that it's going to hit that uptrend, right? So in this scenario, let's just say here, right, that you reach this level here on this candle. Well, where's your next target essentially, right? Your next target essentially becomes right here, right? That's your next price target for you to take profits, for you to trim profits, right? You should be scaling out of your trades at every level. You can hold on to them. If you see that it's a really, really strong uptrend, and if you see that it's blasting through this level, then that is your confirmation of it's probably going to continue. We can't know for sure with 100% certainty that these trends are going to hit every time. But if you see 3 white soldiers in a chart pattern, so going back to one of the trainings I did previously, talking about price action movement, is if you see a hammer candle or 3 white soldiers, or you see this uptrend here that's happening, one that we've already gone over, go back in time on the chart, go back and look and see, okay, well, when was that next pattern? When did the last pattern happen that looked like that? And you see it, it's right here, right? So in the span of, so from May, 12 of May, all the way to August, you've got May, June, July, August. So you've got 3 months time, right? So you've got 3 months time of when that same pattern sort of took place. Well, my theory is go back another 3 months before May, and chances are you're going to see that same exact pattern, which here we are, right? You go back in time, here's your pattern in May, right? Here's that pattern in August, and go back. Oh, what do you know? Here it is again in March, April, May. So like 2.5 months, right? So 2.5 months right here in between this time, and about 3 months before it happened again. Price has memory. It remembers patterns, it remembers trend lines, it remembers support, resistance, all these things. So your job as a trader, as an investor, is to look for clues on the charts, right? We always say it. Chris says it, I said it, Crystal says it, Kia, Ray. If you can read a stock chart, you can print so much money for yourself. But it's your job to look for clues, right? This is a clue. This is a clue. If you're going back in time, and let's just say you got into this in May, or if you got into this back in March, you would say, okay, well, bam, this hit again in March. My theory is for moving forward past May is that, okay, come maybe July or August, this is probably going to run up again. And what happened? Look what it did. It ran up in August. So my guess is, my theory now, moving forward with this one, is that come September, October, maybe mid-October, beginning of November, this is probably going to run up again. It's probably going to have that same exact pattern. Does that make sense? Yeah, so how far back do I usually go? However long it takes. Sometimes it's a year, sometimes it's 6 months, sometimes it's 2 years. I want to go back in time and look and see what the data is, right? Dwayne asks, is there similar features on stockcharts.com that you can find on FinViz? There's similar features, but the scans are different. You can go to like the chart tools. I'll do a breakdown training on that too. Chris has done some also. Since I'm already here on my stock charts, I'll just cover it real quick for you. Right? So you can come here to charts and tools. If you're looking for scanners, right? Your advanced scan workbench, you can create or scheduled scans, right? You can come here to all of these. Where's it at? I haven't scanned actually on stock charts for quite a while actually. Predefined scans. So you're going to come down here to reports and more. So again, you come here to charts and tools, right? Predefined scans, see the latest results. And you can look at all of the candlestick patterns, right? Bullish technical indicators, right? You see the MACD crossover Chris always talks about. You see the gaps ups, the breakaways that I've talked about. You see the bearish ones. But then you can start to look at the patterns, right? Bullish engulfing, morning star, piercing line, 3 white soldiers. You can do all of these scans every single day. So there's no excuse of why you can't find opportunities. There's so many at your fingertips. There's so many. So you can come and do these specific scans, right? You can't, you can get them all where it includes all of these, or you can just click on like the New York Stock Exchange or whatever you want to do, however you want to single it out. It's totally up to you, right? But after the market closed today, you have 91 opportunities of bullish engulfing candles, even though the market is red right now, right? Even though the market is down, there's still bullish engulfing candles, which signal bullish trends. So you can still make money in a bearish market. You just have to be able to dig and do the research. Cool. Renee, I don't really use Yahoo Finance very much. I think Yahoo Finance is delayed in terms of the data in comparison to all the other ones that are out there. I just use Yahoo Finance for like a quick reference point to like their website or whatever. I like to go to some of the other sites, which I've talked about in previous trainings. But let's jump back, right? So we talked about the bullish patterns. So let's talk about the bearish patterns, right? So you've got your shooting star, you've got your hanging man, you've got your evening star, your bearish engulfing candle, you've got your dark cloud cover, and you've got your 3 black crows. Holla to the crows. So with your hanging man, again, it's almost similar to a hammer candle, right? But your hammer can or the hanging man. So this is equivalent of a hammer. It usually forms at the end of an uptrend to the upside with a small body and a long lower wick, and can be either green or red, right? And so this signals the weakness of the uptrend, and the traders often associate this with the selling signals, right? And so if you just look at this, right, and you understand the money flow that we've talked about, that I did trainings with Uncle Gerald, you see that this is a stage 2 to the upside. Boom, this is a stage 3. And then what happens at the stage 3? The stage 3s become stage 1s also, which becomes areas for you to sell, stage 3, or you to accumulate more shares, right? Because from this level, the stage 3s become stage 1, and it can either do 2 things. It's either going to go back to a stage 2 to the upside, or it's going to go to a stage 4 to the downside, right? And in this case, the hanging man is the bearish pattern to the downside. For your shooting star, this is made up of 1 candlestick with a small body and a lower wick. Conversely, the upper wick is very long, and unlike this similar inverted hammer, the pattern occurs at the top of the uptrend, right? So you see the shooting star here. And this indicates that there's a strong price rejection after a significant push-up. Let's just say for SPY, right? How SPY's been rejecting some of these higher levels, right? And it'll automatically push it down. So anytime that you see this shooting star, know that whatever level this is up here, it's a really strong resistance level, right? And it's going to push it back down, whether it's the money makers manipulating it, or whether it just can't break through it. It doesn't have the volume, it doesn't have the momentum, whatever it is, right? Notice that anytime that you see this is usually a strong bearish signal, right? The shooting star is often associated with the bearish reversal, right? Now for your bearish engulfing candle, it's going to be made up of 2 candlesticks. The first one is bullish, the green one's to the upside, while the second one is red, and it engulfs the other. The second candle's body is bigger than the first one, and it usually occurs at the top of the uptrend. So conversely, coming back from the bullish the bullish engulfing candle, right? It's inverted to the downside. It's the same exact concept, the same exact principle, but this time it's to the downside, right? And it's going to increase. It indicates that it's increased selling pressure, and it's the beginning of a potential downtrend. Now you have your evening star, right? So this is the exact opposite of the morning star. It's made up of 3 different candles in the uptrend. The first one is the long bullish candle. The following candle, the star, it's going to present the very long wicks and the short body. And the third candle is the long bearish candle that closes below the midpoint of the first candle, right? So this is your first candle. this is the star, and then this is the third candle, which is going to be that confirmation of the bearish trend, right? Closes below the midpoint of the first candle, and it signals that the current trend is losing strength, and the traders use it as an indication to sell their positions. The confirmation occurs with the third candle, which often launches the downtrend, which is this one here, right? Or basically this one, right? 1, 2, 3. And that signals the downtrend. Come back to these candles. I have the candlestick patterns chart printed and experienced. All right, so moving on. Next, you have the 3 black crows, right? So the 3 black crows pattern, it's recognizable by the 3 red candlesticks inside of the uptrend. So similar to the previous bullish pattern with the 3 white soldiers, right? This one is the 3 black crows to the inside of the downtrend, whereas the 3 soldiers were to the inside of the uptrend. The second and third candles open within the body of the previous ones and closes below it. And the candles usually have little to no lower wicks, right? So you see that on all 3 of these candles here. And this downtrend indicates strong selling pressure, which drives the price lower and can signal an upcoming price reversal, which is where we're at here, right? And then you have your dark cloud cover. And this is made up of the red candle that opens at above the closing price of a previous green candle, but it closes below the midpoint of that same candle, which is this green one here, right? You see that it closes below this one. This pattern appears in the uptrend, generally creates a new high in the stock price. But it indicates 2 things, right? It's going to indicate the pullback or an ending of the current uptrend. And in both scenarios, traders look at this as a sell signal also, right? Make sense? Y'all follow? Good. Any questions? So that's it, y'all. I wanted to go over just kind of the basics, and I think what I'll do is I'll follow up with this training and maybe do a part 2 on some of the more advanced patterns and strategies and kind of touch on these a little bit more and just help you guys understand the charting aspects of it. I'm going to put this in the chat for y'all real quick. Let me attach this file for you real quick. So let's see here. Okay, so y'all should have gotten that screenshot. Let me know if you don't get it. I'll post it in the Discord too, so you guys have it. The clock ticking is reminding me of Stranger Things, but great presentation. It's actually water hitting my air conditioner, which is funny. Ain't nothing I could do to stop it. Bree asks, so for example, on a bullish candle pattern, when would you enter and when would you exit? I assume it would depend on your time frames you are using. Yes, it all depends on the time frames you're using, but then also, just like I was saying before, is that you want to map out. Let me see, where's my trading tool? I'm going to come back here to SPY actually. So again, whenever you see, let me see if I can find. Yeah, so if you come back here and you look, right? So if you look at, say, even this candle right here, really, right? That this becomes this bearish engulfing candle, right? So it's really about where it opens at. You always want to take it to the next highest level. When you're looking at it on this way, you can see here, well, what would your next target be, right? And if you look at it, if you map out your target based on previous data, you can see where it respects those trends, right? So if your next target was essentially here at the top of that wick, you can see, right? If you're in this trade and you see, okay, well, you've mapped out that target. Well, now where's your sorry, hold on. I want to take it to, actually, I want to take it two places. I'm going to take it to this one, right? Where this becomes a target, but I also want to take it to this target, right? Because I always look at like the bodies more than I do the wicks. The bodies are more true resistance levels. The wicks, they can pretty much run through sometimes. So I usually map out the resistance at the bodies of those. So with this candle engulfing this one, I'm mapping out my next target to be right here, right at the top of this wick, which if you look back in time, it's the base of this body, right? It's the base of these wicks of where it closed. So this becomes a pretty true level, right? Because fast forwarding, you can see where it also rejected it and it respected that, right? But then above this level right here, where's my next level to the upside? I'm looking right here at the top of this wick. So if I'm mapping this out to present day where I'm at here, let's just say I entered on this confirmation of this candle to the upside and I'm scalping this and I've mapped out two targets, I'm going to get cautious at this target. Why? Because this was resistance of where this got pushed down. It's probably going to do the same, which it looks like it did. And you can see fast forwarding, it's also where it respected on this candle and also kind of where it respects it on this one and this one here. So you just got to kind of take it in chunks at a time and map out your levels ahead of time and see where it respects it. The charts don't lie. Like you can really go back in time to when it was at that previous level and map it out and see where it's at in present day and how much it respects where it's at. And a lot of the times you guys notice in trades that I get into, I'll say I'm looking at SPY's levels from March 2020 through August of 2020. Well, it's 2022, so I'm going back 2 years of the last time that it was at these levels, respecting them or rejecting them. So it's really however long it takes to go back in time, what you want to look at. That's how I look at it. At what point would you consider entering trades with these patterns? It just all depends, right? It all depends. Every stock price is different. Every trade is different. So you have to base it on, again, like I was saying, that there's levels to this, understanding support and resistance, right? If you don't understand support and resistance, it's going to be hard for you to understand when to enter and exit trades, right? So then take it back a notch and go back to the trainings and understand the openings and closings of those candles, because you can do it prematurely. You can. There's nothing against it, right? But you have to realize that if you do it prematurely and you decide to scalp it, you're also running a high risk of it going to the downside or working against you, or to the upside and vice versa, right? So you want to be careful if it hasn't broken the previous day's highs and lows, and you're entering it prematurely. But every stock is different. You just have to assess the chart based on the chart itself. And then is there any fundamental data connected to it? You know, what are the factors that you're determining when you're entering? If you were to take a reversal trade on the 3 black crows, wouldn't the 3 black crows be the whole trade, yet the 3 bearish candles are just one confirmation? No, those 3 candles aren't the confirmation. Right? So if you're looking at the 3 black crows, this is your confirmation, right? Your second, so this becomes essentially your first candlestick, right? Becomes this first one. Your second and your third candles are here of these, right? So you're essentially writing it further down, basically right here, all here. But it just, these candlesticks are to signify to you that it's a continuation of that downtrend, right? That it's going to continue into that trade itself. Once it breaks that previous low right here, it's already going to the downtrend. You can already map it out ahead of time, right? That if you look at this candle, once it breaks here, what becomes your next target? Right here, right? Or this wick if you want. And if you take this line all the way over, it's basically at the same level of where this closed. So you can take the trade to this level, and if you want, scale out of that trade. And then the next day, where's your next target? Boom, here. Well, then now you take that stronger stronger candle to the downside if you stay in it, and then whatever, you know, previous day candles are over here. So your confirmation is as soon as it breaks to that downtrend of the previous highs and previous lows. Does that make sense? iPhone. Solio, I was looking at SPY on the day chart, not a 4-hour chart. See, it says the day chart. All right, y'all. Anybody got other questions? No questions? If not, that's it. I hope that's I hope it's helpful for you guys to understand the pattern, support, resistance. And if you got questions, tag me in the chat. Feel free to tag me in the rooms. It's always best to tag me in the rooms because maybe your question is going to answer somebody else's in the community. I know a lot of us go in that community and we look at other people's answers and there's the engagement. DMs are totally fine, but tagging inside the chat, I really do try to get to them and answer you guys on a daily basis. Your question might be helpful to somebody else. So it's a collective. We're not just providers for you. You guys are also providers for your peers in that way, right? It's a collective effort in learning the market together. Let's see. Yeah, swing trade should be on 15-minute, 1-hour, 4-hour day chart, and maybe a week. It just all depends on what you're trying to do, right? It just all depends on what you're trying to do. If you're scalping lower time frames, swing trades, I look for probably 90% of my trades. I'm looking at the day chart most of the time. So it just all depends on what your purpose is and what you're trying to do. But I appreciate you guys, man. I appreciate you guys. I appreciate the love. I'm going to keep leading y'all to the money and giving you opportunities to look into if you'll keep showing up and doing the work. And again, if you haven't seen my original post on the 6-week mentorship, I'm giving it away on October 1st to 2 people. So go and click that reaction emoji. Don't flood the chat, but I'm going to give that away to 2 people in the Wealth Squad. And I promise you, it's going to be legit. It's going to be lit. It's going to be great. And you're going to see a significant difference in your portfolios, your lives as a person. We're going to do some real substantial life-changing work together. So I appreciate y'all, man. I love the Wealth Squad. Let's keep running it up, y'all. All right. I'll see you tomorrow in the Discord.